A startup word has become very popular in the last few years, and you must have heard that many people begin a startup and earn a lot of money in a few years. But you might not know that many startups get shut down within a few years due to different reasons. Would you like to know what is a startup? From where and how you can get funds for your startup? Who is an angel investor? What does venture capital mean? On what basis does venture capital invest? What do you have to do to get funds from a VC? What is the process of taking funds from VCs and what is its advantage? Today in this video, I will try to give you detailed information on these topics, that too in simple language so that you can understand everything easily. Hello friends, I am Sanjay Kumar Jha. Welcome you to my YouTube channel, Your Learning School. I have seen this industry very closely and have gained deep knowledge about it because I have been working in a big VC firm for more than 11 years. Despite this, before making a video on this topic, I have also done a lot of research so that I can give you accurate information. This 23 minutes video can change your life as it explains the complete process of funding. Not only this, but further in this video, I am also going to provide a list of angel investors and venture capital firms. So do watch the video till the end. Now we try to understand that what is a startup. Startups are companies that focus on a single product or service. The founders want to give something to the society which is needed but has not been created yet. Stages of a startup. There are 4 stages in a startup. Stage 1, idea stage. Stage 2, early stage. Stage 3, growth stage. Stage 4, maturity stage. Stage 1, idea stage or concept stage. This is the first stage of a startup in which you have only an idea of the business you want to start. There are some thoughts in your mind about how to execute this idea and take it further. This is the stage where plans are made to start and shape up this idea. Now we'll think about how to start it and from where to get the funds to start. To start a business, first of all, you have to invest your own money. It is beneficial for you whenever investors will invest money in the future, they will feel how much confidence you have in your idea. Because clearly, if you don't invest your own money in your idea, then why would someone else invest their money in your idea? After investing your money, you can ask your relatives or friends to lend money to you after informing them about your business plan. After some more development in your startup, you will need more money, for which you have to approach angel investors. Now you will say, who is angel investors? Angel investors are those who invest a little money in your business, take a small part of your business as equity and support you for a long time. Since they come at the beginning of the business, the risk is high. Due to the risk, normally an angel investor invests in 20 to 50 startups, out of which they are able to get good returns. Even if some startups drown, as an example, where I would like to tell you the name of some angel investors. Kunal Shah, founder Cred, Piyush Bansal, founder Lenskart, Sachin Bansal, founder Flipkart, Gaurav Munjal, founder Unacademy, and Ritesh Agarwal, founder Oyo Rooms. These are angel investors who have a lot of knowledge and experience in investment as well as startups. Whereas sometimes angel investors do not invest directly in the startups but make their investment through angel investment networks. An angel investment network is a form when individual investors come together to invest. Here I'd like to tell you the name of some famous angel investment networks in India. That is Mumbai Angel Networks, Indian Angel Network, Lead Angel Network, the Chennai Angels, Calcutta Angels, Hyderabad Angels, Chandigarh Angels Network, Let's Venture, and Venture Catalyst. For your information, I have also shared a link in the comment box below where you will get the details of many angel investors. To know more about this, I would suggest you to watch Shark Tank India on Sony channel. By watching this, you will get a lot of knowledge about startup investment. Here, aspiring entrepreneurs from India present their business model to a panel of investors and persuade them to invest in their startup. If investors like their business model and see future growth in that business, they make a commitment to invest in that startup by offering its correct valuation and giving a check instantly. For more details on Shark Tank India, I have shared a link in the comment box also. Now, stage 2, early stage. This is a stage in which the founders keep working towards launching their product or service offering and make their startup a little bigger. In this stage, your business plan is fully prepared and the product is also ready. Along with this, it is necessary that the customers also like your product which you are offering and have a desire to buy it. Not only this, your startup should also have capable employees who will help in taking your business forward. Since in this stage you need more funds, that is why you have to approach to venture capital, VCs. A VC may invest from 1 crore to 100 crores in a startup. I am going to tell you more details about venture capital in this video later. Stage 3, growth stage. A company enters the growth stage when it has a solid business model and it keeps working strongly towards making its business bigger. In this stage, your full focus should be on products, sales, growth, revenue, and profits. In the growth stage, there is the entry of big VCs who starts their investments with a minimum of 50 crores. Stage 4, maturity stage. Private equity entry takes place in this stage. Private equity invests money only in a stable business. Since its investment is large, it works on low risk. PE invests money in all kinds of industries. It only sees profit and stays in business for a long period. Since the risk is less in this stage, therefore mutual fund companies also prefer to invest in this stage. Its exit happens only after the stock market listing of the company, that is IPO. Now we'll try to understand about venture capital in details. What is venture capital? Venture capital is a type of investment fund that invests in early stage startups in exchange for equity in the company. They come with high risk and they also have the potential to generate high returns. Usually, investors in venture capitals are institutions, family offices, or HNIs, high net worth individuals. There are usually many general partners in the venture capital firm who are experts in their respective fields and are always ready to support and nurture startups. When and why should we approach venture capital? In order to take our startup forward, huge investments are required in it, which may run into crores. It is not possible at this stage to get large fund from anywhere else. If we go to the bank for a business loan or personal loan, then the bank loan is not easily available, and if it is available, then for that the bank keeps your property paper or jewelry as security. Not only this, you also have to pay monthly interest. In this, the biggest risk is that if your business could not run for any reason, then it becomes impossible for you to repay the loan at that time because you have already invested all your money in starting your business. Due to this, bank loan, sometimes founders' personal properties are also forfeited. Taking a business loan in the beginning always keeps you in tension and you are not able to focus properly on your business. This is the reason why you are advised to approach venture capital, who invest crores of rupees as a partner in your business for any reason. If the business does not work, then you do not have to return a single penny. If the company grows, the VC's money multiplies, and if the company sinks, its money also sinks. There are many important advantages of taking funds from venture capital. That is, you will get large funds from here. Also, you get their precious advice from experienced leadership. With their support, you get maximum networking facilities. Through these, you all get opportunity for collaboration with the industry experts and other startups. Their cooperation is also important in market publicity. Not only this, they give you full support in the next round of funding. Most startups are unable to make their companies successful on a large scale without the VC funding. Along with funding, VC always nurtures you like a guardian to take the business forward, which is very important for the success of any startup. But you should approach such a venture capital firm for your fund which has an expert level of team and can show you the right path at the right time. One important thing I would like to mention here is that the hard work and passion of the founders is of the utmost importance to take the business forward in the right direction. After a lot of hard work, along with the right guidance, some of these startups became unicorns. Unicorns, you must have heard the word somewhere else. It means that when the value of a company is more than 1 billion US dollar, then we'll call it a unicorn. Being a unicorn is not very easy, but it is not impossible either. Does every startup have a dream that how to become a unicorn? To reach here, we need multiple rounds of funding for which you have to work hard continuously. I have also seen that many startups receive funds from venture capital but are not able to use that money properly to grow their business, and their business gets closed within a few years. If a venture capital firm invests money in 10 startups, then it is believed that out of that, almost 3 to 4 companies get drowned. Rest 3 to 4 companies give small returns, and the remaining 2 or 3 companies give huge returns. That also recover the money of all drowned companies and also increase their total fund size multiple times. Not only this, the founders of successful startups are become billionaires in a few years. You must have heard the names of Make My Trip, Ola, Oyo, Redbus, Paytm, Byju's, Swiggy, and Big Basket. All these startups have become successful on a large scale only after the funding of venture capital. I want to tell you one important thing here. During the COVID pandemic, many startups faced bad conditions and many of them closed down. Even in such a situation, the founders of many companies had achieved great success by turning that pandemic into an opportunity. Despite the pandemic of 2020, 11 Indian startups became unicorn. The name of these startups are Unacademy, Pine Labs, First Cry, Ginoti, Nika, Postman, Zerodha, Cars24, Daily Hunt, and Glance. Similarly, in 2021, 42 Indian startups joined the list of unicorn. Some of the well-known names are as follows: Urban Company, Echo, Upgrade, Vedantu, Cred, Grofers, Farm Easy, Misho, Bharat Pay, Car Dekho, MobiQuick, Lycius, and Mamaearth. In 2022, 21 Indian startups have joined the club of unicorn. Some of those names are as follows: Uniford, Tata 1mg, LiveSpace, Purple, Dealshare, etc. Here I would like to tell you one more important thing, that India has emerged as the third largest startup ecosystem globally. It is a matter of pride for us. Now you must have understand that if you want to make your startup successful, then why have to approach venture capital only? Now I would like to tell you on what basis venture capital does investments. Venture capital investment are focused on industry, market segment, financial stage, and geography. Some VCs invest in technology, some in real estate, and some in e-commerce. Similarly, some in FMCG and some in health sector. Everyone has their own criteria for investments. Therefore, before approaching to VCs, you must have to understand about them, that which VC invest in which industry and which stages. What is their minimum and maximum investment criteria? What preparation do you need before going to venture capital firm? You must have a good elevator pitch. Elevator pitch is a brief speech of 30 seconds to 2 minutes in which you must talk about the product and services of your startup. It is more popular because you can use it in hurry while walking and traveling anywhere. Apart from this, it is also necessary to have a strong investor pitch deck as PowerPoint presentation, which can give maximum information in minimum number of slides. Because this is the first document that goes to the investors, therefore it is necessary to work well on it. Some basic points of investment must be mentioned in your business presentation. For this, you need to do deep research about your startup. Here I tell you some important points which are needed to be mentioned in the presentation. Market size, a strong team, track record of the management team, revenue growth, profitability, business model and innovative product, proof of concept, entry barriers, and favorable terms and conditions. Investors will be interested in your business only when they see multiple time growth in your startup. How much passion the founders have to take this business forward. You have to keep in mind one thing in particular, that when you go to the investors, you must be well prepared so that you can give accurate answers to all their questions and they do not have any kind of doubt about you and your startup. Just by going to VCs and showing presentation, you do not get money. Thousands of startups comes to VC for funds, and out of that, only 5 to 10 startups get funds, which fulfill all their parameters. Sometimes you will get the funds within a month. Sometimes it takes even a year. Normally it takes 3 to 6 months for the process to be completed and the fund to be released. Because there is a lot of process for this, for which you have to follow a step-by-step process. First of all, you should prepare a list of venture capital firms that invest in the industry in which your startup is. Then study their website properly. There is a link of forum on most of the VC's website in which you need to fill all the details, and there is a option to upload a presentation. After your details are submitted, within 5 to 10 days, you will get a reply by an email and you will be asked for the next level of documents. If your startup does not meet their investment criteria, then in this case, you get a regret email. Keep one thing in your mind, that you do not have to lose your courage after seeing regret email. Rather, you have to approach with other VCs. It is possible that 2, 4 or 10 VCs may refuse you, but you have to keep trying continuously in the right direction with full confidence. Sometimes such a situation also comes that many VCs are ready to give you money at the same time. In this situation, you have to choose the best option, which is better for your startup. If you reach the next stage, you start a correspondence which happens in the form of emails, video calls, or meetings, in which deep level of financial discussion takes place. And there are also talks about products and marketing. The VC may ask you to present the complete projection for the next 1 year, 2 years, 3 years, and 5 years. Along with this, there is also talk about exit process in the future, because VCs pay full attention to your growth as well as your exit. This type of discussion takes a lot of time. When everything goes in right direction, after that negotiation for the stake starts, which focuses on the valuation of your startup at that time. If VC invests 10 crores, then what percent of equity will they get? When everything is decided, after that startup's DD, due diligence starts, which is done by third party. This process is done by a CACS at law firm. Through this process, they get a complete report about the startup company and their founders. What is going right and wrong inside the company? How is the background of the founders? Is there any fraud case? etc. When everything is correct, then there is an agreement signed between the two, which is called SHA, Shareholder Agreement. It is a legal document of about 100 pages. In this agreement, all the terms and conditions are written about the investments and how to run the company further. When the SHA is signed, it is almost decided that you will get the money now. We have also seen such cases many times that even after the SHA is signed, startups didn't get fund due to any reason. Therefore, the risk remains till the first check is not received or the funds of the first installment are not transferred to your account. If the VC makes a commitment of 10 crores to you, then there are terms and conditions for that also. In what kind of installment you will get the funds. Normally, fund is released according to your requirements so that you will not get any problem in your business due to lack of funds. Once you have received the funds from VC, you expand your business according to your business plan. And there is no limit to expansion. That's why after 1 or 2 years, you need more funds. For this, now you have to go bigger VCs for different round of funding. We call this as Series A, Series B, Series C, Series D, etc. The size of the funds increases in every round and the valuation of your company also increases manifold. In most of the cases, as soon as the startup reaches the Series B and Series C level, first round VC and most of the angel investors exit. Similarly, this process continues further. Now you must be feeling the need of a list of venture capital firms to whom you would like to go for funding for your startup. For your help, I have also shared a list of SEBI registered venture capital firms in the comment box below, in which you will find the list of all VCs registered in India. Friends, I hope that now you have got important information about a startup and venture capital fund through this video. I would like to request you to like this video and encourage me by forwarding it as much as possible. Also, for any kind of information related to this, please feel free to write me in the comment box. If you have not subscribed my channel yet, please do it now so that you will get to see more videos related to it. Thank you.